in this relation, I want to introduce Johannes Proksch today, who will be discussing the topic of decentralized finance and capital markets. Thank you very much.
Thank you very much, Lucas, and hi everyone. I'm the first time here, so I would like to understand, how savvy you are, how much of crypto knowledge and adoption you have already. So maybe whoever has purchased already a coin or token on a centralized exchange, so Bitband or Kraken, please raise your hand. Okay. And who here has purchased or used or is using a wallet like MetaMask? Okay. So I was already worried because I only saw one. Well, that means that you are already very much into Web3. And this is the topic for today, adoption, DeFi adoption, transition into DeFi. And you are crypto native, congratulations to all of you. I would like, before I go into the topic, to introduce a little bit myself, because you will see I'm coming really from the other end of the spectrum, from traditional finance, as I spent my whole career in focusing on financial institutions. 11 years in London as an investment banker on financial institutions, mergers, acquisitions throughout Europe, and capital market transactions. Then I came in 2010 back to Austria. I was a board member of atweb3 Bank, restructuring it after its nationalization. In 2015, we basically continued in transforming then the good bank, which is today called Addiko Bank. We transformed it into a very focused consumer lender. They're operating in the Balkan, so ex-Yugoslavia, and they are ECB regulated, so you cannot get more than that. They are listed on the Vienna Stock Exchange. Very few people know that because we didn't do a phase out of this, particularly in Austria. I'm their supervisory board member and a shareholder, so much about my background to TradFi. Now, this would obviously not qualify me to discuss here, particularly for this kind of group, DeFi transition. So I basically had a very rare chance in a career in 2020 at the beginning of the pandemic. I was able to basically take some time out and focus on what I have done before and assess basically to which extent the financial sector and the financial industry is about to change. And what I figured out is actually my experience in restructuring is still very relevant, because it's not only atweb3, but now it's the whole sector who basically needs to be heavily restructured. Very few people know that, and they feel very cozy and safe in there. But I very much believe that it's not fintech which will do that job, it's the blockchain. So I did a course on, with Professor Daudes, and I watched a lot of YouTube videos, I followed a lot of podcasts, and I read a lot about it. And, with my background from traditional finance, I obviously try to compare. Maybe I can bring today a slightly different perspective to you, to which extent decentralized finance is already a challenger to traditional finance, and what I believe will be the adoption going forward on the market players. Now, as a consequence, I went fully crypto myself, native. I founded my company, which is called atweb3. So you can see Web3 is in there. AT for, you could say, Austria. So I also believe that you need a local connection, but also for attestation. We will come to this, and I have started, this is one of the earliest thing, a validated attestation service on a blockchain, which is very rarely known in Austria as the Silo blockchain, but that's not the topic of today. Now, let's quickly just recap where we are with traditional finance, and obviously I try to highlight a little bit and show you maybe the bleak outlook for them. They have, I would have said, failed the society so far. 30% roughly, according to different metrics, market cap and so on, is their share of our economic life. I think this is too dominant for their function, and it's a burden for the society. Now, banks had a historical role in transforming or earning interest rates, trying to have a narrow revenue out of this and benefiting so that deposit and loan takers can benefit out of this. And they had the task in transforming deposits into loans. So a kind of a risk assessment. What has happened, and I know that this is very generic, but I would obviously like to highlight just a little bit these extremes, that the system of banks became extremely inefficient, complex, bureaucratic, and fails constantly. If you ask a banker to explain you the financial crisis of 2008, he will hardly be able to explain it to you. Now, 14 years later, still not possible. And often they just call it a multi-organ failure. So whoever knows what that is, but basically not a good explanation. So the increase of regulation has hardly helped. Otherwise, we wouldn't have this kind of very, basic failures like Wirecard, the office head over there, and in Austria, a particular one, Commerzialbank Austria. Yeah? So you can see that basically they continuously increase regulations, but they don't see the woods for the trees. They have lost basically what is the real nature of financial institutions, what their services should be. And they have continued to become more complex themselves. They love to be so-called universal banks. They are conglomerates, as I would say so. They have businesses which have nothing to do, unrelated to each other, and disproportional overheads and legacy IT. Now, very few people would have looked at it, this way. But if you, I would at least say it's very questionable if the financial service industry would have survived the pandemic if it wouldn't have been for massive taxpayers' money putting in monetary fiscal policies, basically avoiding all these insolvencies, which we at the beginning actually expected. So banks were saved again, because I believe that their risk structures and their assessment of risk is still not good. Now, that was obviously very generic, but why do I believe that the blockchain technology will trigger a complete reset to the financial sector? And that doesn't mean that the brands will disappear. This is, I'm looking at it more from a technology perspective. Just studying the blockchain, you quickly understand that the decentralized ledger technology requires a complete disassemblement of each product. It needs to be digitized again, coded in basically for the blockchain from the scratch before composing these, and we call it primitives, so basically basic elements of these financial products again into financial solutions. So this is a very deep assessment. The good thing about this is it's open source and people can basically look at it and improve it at no costs. This has created a mind-blowing speed of innovation. And if you imagine that what has been created by the industry itself was basically within 3 years matched completely, and I will come to the examples, by DeFi, so you have all these primitives already in the toolbox to create real solutions. And now I'm coming to some of them, and maybe you know them, but so from the comparison to the TradFi product. So investing and trading in coins and tokens. That's one of the major, kind of activity, as I quickly discovered. Every traditional investment product is today and can be created or accessible via a price feed called Oracle, and mirrored into the chain. So anything. It's obviously clear that once a majority of market participant has a wallet, they will access it via the wallet, which is far more efficient, and therefore real-world investments will in the future increasingly be issued on-chain. I'm convinced about this, the technology is just much better. Okay, then you need to get familiar with what is staking rewards. They're similar to the earning streams coming from traditional investments. There are some obviously special cases with the tokenomics and so on you need to understand, but basically these coins and tokens, they are generating these kind of rewards, and the more the adoption of this blockchain technology or these services, the dApps, is progressing, the more they become sustainable. Because as you know, many of these coins and tokens these days are inflationary and do not generate on their own merits, so far a profit. Interestingly, these liquidity pools, just to understand what they are basically a possibility to replace completely traditional market makers, actually exchanges, and enable these providers of liquidity to earn also, a spread. Very interesting to see this comparison to the centralized exchanges, or actually traditional exchanges, which need market maker and a lot of participants enabling the trade of these tokens. Collateralized lending, it's obviously something many people have seen. And you can obviously use this on chain, but only if you have a collateral. Still, this needs to be crypto collateral in many cases, but real world assets will follow soon. Derivatives, just over the last three-quarter year, more and more have been established. Also decentralized derivative exchanges. They allow hedging, trading, with leveraged exposures, actually in any tokenized assets. So this is also very interesting because with derivatives you can do a lot of things, and they have actually a bigger volume than traditional their underlying assets themselves. Now, unsecured lending, which is something I'm very much interested in, still in a very early phase, because you need credit bureaus in reality to provide a loan. Now, this is on-chain difficult, but I see that these kind of attestation services are popping up, which allow basically to have, under the self-sovereign identity kind of umbrella, a possibility to get these credentials also via Oracle's on-chain. So I believe this is something which will happen very soon, most probably in the third world and not here in the West. Now, interestingly, and this is what you can see, that every week or day something new comes up. I just read a couple of days ago that interest rate swaps will soon basically be also implemented or are actually going live. I mean, this is a huge market. Interest rate derivatives is one of the largest markets actually existing in the TradFi business. What that leads me to believe is that soon the innovation in DeFi products will significantly exceed what we know so far from TradFi business. So give it 1 or 2 years more, and you will see products which you have never been able to imagine in a normal traditional environment. And now let's look of what the players in the ecosystem or in a traditional finance system, how they will transition. I think it's already clear that exchanges, traditional exchanges, and security settlement or clearing service, and they're huge, Clearstream, Euroclear, and so on, huge systems, they will be fully wiped out in my view from a technology perspective, because they cannot compete not on the cost base, not on efficiency, not on the speed with the decentralized exchanges. So the idea, the toolbox is here, it just needs to be further implemented, and you can see that some of these exchanges already have subsidiaries which are acting in this area to familiarize themselves with the product. Centralized exchanges, interestingly, so Bitbanda in Austria, but Coinbase more importantly because they're listed, they just added the custody element, because custody is very difficult to basically bring onto the chain, and they are already listed. So this is and actually quite significant values, although this dropped now over the recent weeks. FTX and Kraken will be the next ones to come. Asset managers, this is really interesting, are more and more moving into the chain, onto the chain. You will be able, in my view, to invest in all asset classes and in all investment strategies, even derivative investment strategy, option strategies, soon on-chain, as long as you have a wallet. And the adoption process also here will basically follow wallet adoption. The fund industry, which is, the early movers are always in Luxembourg and Liechtenstein. They are already, or have already established their legal framework and regulatory framework. And I see that the real economy assets will be made available on-chain. So that, I think, is the first one, next one to come. And this will be a huge industry, as you can imagine, because this allows, in many instances, even today already, to circumvent banks completely. So you don't need bank intermediaries any longer. Payment providers, this is obviously not so much related to capital markets, but I believe that payment providers will be marginalized to a wide extent because on-chain wallets are basically providing this already today. And the question is just, who will, at the end of the day, make it through. And you can see already that some of them have already implemented or are about to implement wallets. They can still differentiate themselves toward the merchants, the SME and corporates, by basically offering them some digital solutions backed by on-chain behavioral analysis. So this is what these players, but this is a huge market. Visa, MasterCard, and so on. They're all obviously in this field. Specialized lenders will become even more specialized, but to some extent completely disappear from the views. And this is because particularly consumer car mortgage lenders will be completely integrated in the consumer journey. So you purchase something, you buy it with the wallet, you fund it via the crypto markets, and there's no bank any longer there. And so therefore, I believe that they need to adopt also very soon. Wholesale lenders are a little bit different, and wholesale capital markets for funding, you need expertise there, and they basically will come up with crypto market knowledge, deep knowledge in this area. Universal banks, I believe, will become a thing of the past, as they need to focus on specific customer segments. At the moment, they're all for everybody, and they will deploy wallets and obviously appropriate protocols, but they will be very focused on some themes and customer segments. I think a completely new area will be validators and attestators. Basically, the new service industry for the blockchain. These are credit bureaus, auditors, notaries, lawyers, KYC, AML providers, which will basically, through the attestation service, directly service the blockchain protocols instead of servicing the banks. And this will allow basically all sort of new also far beyond DeFi possibilities. Now, obviously, you will have a lot of questions with regards to which extent decentralization will be implemented. Is it useful? Is this the right direction? And also regulators and central banks, what they will basically try to do. My view is that they cannot stop it. They can certainly delay it. So the positive outlook, I believe, is that the benefits for the society would be that the cost base will be basically marginalized of these services, and ultimately this allows, what banks have been built for at the beginning, that financial inclusion, you can basically have access to financial services, and this is ultimately a precondition for prosperity. And we shouldn't forget that 80% of the population doesn't live in a democratic society, doesn't have banking access so easily, and cannot afford it if it comes at the cost of traditional finance. And with that, I'd like to return to Lucas. Yeah, thank you.
Thank you, Johannes. Very interesting. Thank you. I want to ask the first question today for you. Do you know, perchance, the top 3 exchanges in the world are Binance, FTX, and Coinbase? Do you know who's knocking at the door currently at FTX?
You mean that they intend to...
What huge international bank is knocking at the door of FTX?
No, honestly not. Oh. I can imagine that many... I think that the adoption, the banks already see it coming. The smart ones basically try to build up, internal expertise through acquisitions, maybe, and at the same time, obviously, they intervene in Washington to allow a little bit more time for the adoption, because they like, obviously, to get still, in front of their customers with good products, and these will be DeFi products at the end of the day. So I'm not sure which bank, could be Bank of America, I don't know. I generally am very skeptical about banks, trying to innovate, acquire innovation companies, because normally it fails the moment this company gets into a traditional finance institution, innovation stops. Because, regulation, a lot of no-sayers and so on. So then it's obviously not, if they acquire such a big exchange, then they will, allow it to flourish.
It's a very good answer, because in that case, they don't even have a chance, because it's actually Goldman Sachs who... They're not trying to acquire the FTX, but they want to partner, because they want to figure out how their derivatives trading is working. This is one very interesting fact, that such a huge company is knocking at the doors of the second largest exchange in the world. If you think about, BlackRock, the largest asset manager in the world, or Fidelity, second largest, I think. Both of them recently invested into Circle, which is the company behind USDC, the second largest, I think, at the moment, stablecoin. So a lot of things are happening. A lot of traditional TradFi companies are coming into the market. So
actually, the guys behind Circle are actually ex-Goldman Sachs themselves. So, this is... so you're in a good company if you leave banks, so then you can basically innovate and do stuff, yeah.
It looks like that, yeah. It's going to be interesting times ahead, as I mentioned. So the crypto winter, it's a good time to build, to look ahead. So does anyone else have a question? Yeah.
Thank you very much. This was really very informative discussion and talk. I would like to add just a little more information that currently Bank of New York Mellon, this has become the first bank who is offering its clients to deposit cryptocurrency, and they want to take as a collateral, and they are offering the same like we have this fiat currency. They are offering the same asset management for crypto, mainly Bitcoin. So the banks are also, they have realized that without involving crypto into their financial system, they are going to collapse, because mainly if we look into the regulatory system, this central bank digital currency, this is also a very, I should say, due to strict regulations, they are still not able to implement. Although China has already started transactions, and they have already started transactions with, they made some pilot projects with Middle East and Russia also for these oil transactions. So for China, this digital currency, that's why they threw all these Bitcoin miners and all, because it was harmful for their environment, and they wanted to implement this digital yuan, which they are successful now at certain stage. So financial institutes, definitely they are realizing the importance of crypto, but on the other side, if you look on the centralized, even decentralized exchanges, the main challenge is that due to unavailability of regulatory system, when you are trading on stock exchange, standard trading, then there are certain there are circuits that define that whether it's this trade is going in long directions or short put and call directions. There are certain circuits that keep the investor at give the certain safety to the investor. But these circuits are still not implemented due to absence of regulatory system. These circuits are not implemented in any central exchanges. And the main difference is like Binance. Binance is behaving quite differently in the United States and in Europe. In Europe, if you are doing some trading in Binance, there is a possibility, it happened in December 4th, I think it was 4th December, that it was a big week which took price from 52,000 and liquidated all the long positions and dropped down to 41,000, and it was a matter of 2 minutes. And it just jumped back to 48,000 because it liquidated. This was the biggest liquidation by that time. But it did not happen in the United States. And if we look into the coins or the projects that are implemented into Binance, they are completely different. In the United States, because it's very regulatory, and every Wednesday, every third Wednesday, Powell comes into the financial advice, and they start regulating. So their coins, their projects are different from the projects that we have in Europe, registered on Binance. So I think if we are going into the regulatory system, somehow it creates a fear that we don't know what will happen, taxation, all the challenges, but on the other side, it's safety for the retailers. Market maker, they don't care. They are market makers. If now the Bitcoin is dropping, they are earning by shorting the market. If it will, and they are deciding the market. It's no more decentralized. Because there are few players who are just playing. So the important thing is right now the implementation of regulatory system, which can help for retailers to save their funds or investments. This is what I learned from my experience, because when we were implementing some regulatory system in Asia, I have realized the biggest challenge is that the retailers are not safe. This is and the banks, or they want to go to banks, traditional, conventional banks, because they feel it comfortable that at least their money is safe. It's not dropping to that level, like 50% or 90% within a couple of hours or minutes. And the project that she has presented, this is somehow really good for conventional community. Because our conventional buyer or conventional user, they don't like to go into wallet and this and this and that. They are very happy if they have some wallet or card on their watch. They go pay. And I think there was some commercial also, when the old woman, she comes from sports and she wants to buy some product. And on counter, he says that, please, can you pay? And she takes her joggers, put on the counter, and she says, okay, I paid it for that. So people made the payment easiest for them, as in the form of a fun, but also it's a comfort zone for them. So blockchain is good when we are giving comfort to the common people, which we have not reached yet. So it's still...
I think you're absolutely right.
Thank you.
Regulation, I think this is I don't want to call it Wild West, but this is an experimental phase. That's how I look at it. If you go into some of these tokens and on the liquidity, so it's very difficult, to quickly understand what is, what is good and what's stable, and so on. On the other side, if you bring in the regulators now, it kills innovation. That's the problem. So the innovation only can happen if you don't have the regulation already in your neck. For the mass adoption, regulation is needed, but I hope obviously that regulators, with a good understanding of this technology, will implement it, and not as it seems today, they just try to copy paste what they have done on traditional finance, because it's different technology, it wouldn't work, and then they would kill it. But I believe that the discussions, and this is you can basically discuss it for the whole evening, where we are and so on. I believe that it goes in the good direction, because you can see that the US, they're already a little bit more ahead, I would say, than Europe on these topics. The legislators, they start to become more knowledgeable about it, and they come up with better and better, I think, proposals. And Europe, ultimately, they will look at what's happening elsewhere, to also not completely stop the whole industry for developing in Europe. So Luxembourg, they are very good because they live from it. So they obviously are open-minded, and others are less so, but ultimately it will, I think it will go into the right direction. Regulation will come. I still hope that the sense of decentralization can be maintained. And I still hope that the traditional banks don't muscle in and just to save their middle role, and avoid competition. So the middleman role. So that's what I hope. A decentralized finance is a good, as long as it is possible. Nobody should be forced to basically have a non-custodial wallet. But as long as it's possible, this creates a competition, because they need to benchmark themselves against a non-custodial option. And I think that would just be good for competition. Most probably the majority of the population will use custodial services still, which is good for them and safer. Yeah.
Post had to come out of the box, and they had to design new business model. Otherwise, people don't need Post. Yeah. Right? I can send email within a couple of seconds. The receiver can receive immediately. So there is no need of Post anymore if they don't make new innovative projects, or they have additional, I should say, give the benefits to the customer. Similarly, with the banks, if the banks, they don't change their mindset, and they are not going to adopt, at least, I should say, central bank currency, digital currency. They should go, this is the minimum that they start thinking about it. Because this will help to compensate or give the soothing effect of this inflation, which is happening currently in financial market.
Yeah, we have an alternative, and that's good. Yeah.
Okay, next question over there.
So I wanted to give you some input on your thoughts you have. In Liechtenstein, I was in contact with a bank in Liechtenstein, a very well-known bank, because German and Austrian banks, you can forget them. This we have to say, honestly, And it was very interesting for me to dive a little bit into the kind of thinking of this Bank of Liechtenstein. They have a blockchain department, And in this blockchain department, you meet a little bit different people than when you go to the blockchain department of Erste Bank or Raiffeisen. So, and then they give you some rules, bullet points. And these bullet points, you can fulfill them. It's easy as a company. And due to the reason that I have this permission from the FMA, so, it's a good first step for them, because without permission, they don't do anything. And then it was interesting because we were then in the topic of transactions, how many euros they cover. Okay, and they have a stop into 300 million euros or dollars. It doesn't matter. So 300 million euros. And then they have to split the account. And at that moment, they have a department where they start trading you the assets. Some in cryptos, of course, and the others in normal stocks as a service, like a fund manager. And this is, for me, really innovative. And the only thing they want to have for that is a really very good, also by technology, done KYC process inside the company. And they do not want to have the normal user. They say, no, it's not our job to open a lot of normal user accounts, therefore you can go to Raiffeisen or anywhere else, but everything is going from one account, from company account, that the user where the user coverage the wallet. And this is cool, honest, yeah? I don't know by law, I guess in Liechtenstein, what kind of law we have. European law, are they under the coverage of European law? This is what, the lawyers are now on that, but,
I cannot tell you precisely, but I think they came out already 2 years ago with a regulatory framework which they wanted to implement, and they have, I think, implemented. How far? I think they are in the EVR, so in the European Wirtschaftsraum. Yeah, so they have some similarities. I can't tell you what exactly the limits are if you adopt the Liechtenstein solution in terms of selling then products or tokenized products in the other European countries. But I think they are quite similar. Yeah.
But they also have Kraken as a client, everything Kraken is doing, as an exchange thing, they also cannot do this in Germany, interestingly. Yeah? So, and I want to say that in Europe, sometimes it's good not to do things first. Yeah. Also in machine learning, artificial intelligence, all those things, sometimes, you sit and look and write, and intellectual property, that is in Europe, yeah. What I see from the Valley coming in the last 50 years is not super intellectual property, so there is hope, you know what I mean? And if we took these windows of opportunities, and if we see it, there is a lot of potential in Europe. I really believe in Europe. Okay, it's economically down now, but naja. Ja, wir werden wieder aufstehen.
Yeah. But you have a lot of players already which are exactly on the cross, road between a bank with banking licenses already, with crypto wallets and so on.
So ich kann Sie halten, danke. Yeah. So with a Wolf Dice lawyer, you get a bank license, like Big Panda.
No, but that's not what I'm saying. You need to. That's not what I'm saying. I don't think that you should basically, go this route, because just to have a banking license in Austria and then offering crypto, I think this would be crazy.
Yes.
You really need to choose the right jurisdiction and so on and so on. The Austrian regulator is just not up to the task. They are too cautious, and for the Austrian regulator, there's nothing to win. So you need to go to, I would say, at least to the more, open regulators. And still, MiCA and all these regulations provide you such an uncertainty that to really invest money now is too early. In a licensed banking licensed operation, I think I wouldn't do that. That's not safe. That's not much safer, I think. This is, but depends if you want to be global and so on. I think there are a lot of possibilities, but there are already business models which I think still that the countries which are most innovative and try at least to understand the issue and so on are Luxembourg, because they live from the fund industry. And what is the nasty word, shadow banking? This is basically coming. This is a billion industry, and obviously most investors into these funds are still institutional investors, because they are comfortable with investing into security which is issued out of Luxembourg. Retail investors wouldn't do that. But it's a multi-billion industry. It's a huge industry, and these countries live from that. They've always lived from it, so they at least can show you the path, and then you can move from there. There are a lot of I think at the moment ambitions to find the right solution just for issuing a fund in Europe. Switzerland is also quite good. But Switzerland is obviously, not accepted by the EU or by many. And if you go to retail, then it becomes a real difficulty, because then you need to adopt really very stringent rules, which is also normal. I understand that. Institutional investors, can take and assess their own risk. But retail, with all things what happen, I understand that regulators become nervous. And there was just a couple of days ago this Celsius topic. Yeah? I mean, because you mentioned Solaris Bank. Solaris Bank provides, actually, there's in Germany a bank which is called, it was called Bitwale, now it's Curie, yeah? Okay. And they are offering, and this is basically exactly on the verge of, they're offering deposit insured fiat account, euro account, deposit insured, so up to 100,000. Yeah, and this is normally really critical. The regulators hate to see deposits coming close to crypto, for also, I think, good reasons. And at the same time, but this is offered by Solaris Bank, and Nuri basically then adds a wallet where you can invest, I think, in 2-3 currencies, so very basic possibilities. But they offered also decentralized finance investments, so basically getting some staking rewards via Celsius. So obviously now they have a huge issue, because it has been stopped, so no repayments to their customers. That gives again, a lot of arguments to the regulators to be skeptical and not a lot. I don't think it will stop it. It just shows that you need, and they called themselves actually, they said the future of them will be to guide investors, retail investors, to safer products, and everybody thought that Celsius is safer. Yeah, obviously we know now that this is not the case, but so there's still some hurdles to be taken here. Yeah.
Johannes Proksch, many thanks for your very interesting insights.